Is the political landscape in Italy causing a ripple effect in the European economy? To answer that, we'll have to take a journey back in time, tracing the events that have led us to the present day. Our journey starts in January 2021, when Italy was in a state of uncertainty. The Prime Minister back then, Giuseppe Conte, was working on a new coalition pact amidst a looming political crisis. Despite this uncertainty, Italian government bond yields fell, with other European government bond yields following suit. Investors took profits on Italian government bonds after the risk premium fell to its lowest since 2016. The European Central Bank, under President Christine Lagarde, kept a watchful eye on exchange rate developments and their impact on inflation. Fast forward to later that month, when the political noise in Rome reached a crescendo, leading to discussions of a possible snap election. This political uncertainty coincided with a policy meeting at the European Central Bank, which was seen as more hawkish than expected. The result? Government bonds from Italy and Spain sold off heavily, pushing yields to their highest levels since November. The risk premium on Italian debt compared to German debt also rose to its highest level since mid-November. Then in July 2022, the European stock market, represented by the STOXX 600 index, experienced a decline of 1.5% due to concerns over recession and rising inflation. Commodity and bank stocks were the main contributors to this decline. The European Commission also revised down its economic growth forecast for the Eurozone and revised up its estimates for inflation. Italy's main index, the MIB, dropped 3.4% as the country's government faced potential collapse. So, what have we learned? The political situation in Italy has had a profound effect on the European economy, causing fluctuations in the stock and bond markets. It's a classic example of how politics and economy are intertwined, and how changes in one can have far-reaching effects on the other. The key takeaway is this: in an interconnected world, no country, no matter how economically strong, is immune to the ripple effects of political instability in another. So it's always worth keeping an eye on the political landscape, not just in your own country, but around the world.